Walk through parts of East or South London right now at night, and you'll see it for yourself. Glass towers fully built, balconies fitted, lobbies finished, marble floors gleaming under lights nobody's paying to turn off, and floor after floor after floor completely dark. According to JLL's February 2026 report, London's Housing Challenge, 23% of the homes completed in London last year are still unsold. Property analytics firm Molior puts a hard number on that. Over 22,000 unsold homes across the capital right now. Of those, 3,600 units are fully completed, fitted out, ready to move into today, and sitting empty. Another 18,737 are still being built behind them, joining the queue. Think about that for a second. This isn't a housing shortage, it's the exact opposite. London built the homes, it built thousands of them, and nobody's buying them. Here's the thing that should really worry you if you already own a flat, or you're thinking about buying one. This didn't happen by accident, and it isn't one problem. It's three separate problems, stacking on top of each other, feeding each other, and by the time you understand all three, you're going to look at every glass tower you pass a little differently. Let's start with the one we have been warning you about since our very first video. Problem 1 is the mortgage trap. Hamptons research found that 37% of flats across England and Wales now carry a service charge above 1% of the property's value, up from just 29% 5 years ago. That might sound like a technical detail, it isn't. Lenders have quietly tightened their criteria around exactly that 1% line, and once a flat crosses it, some mortgage providers simply won't touch it. Not because the flat is unsafe, not because it's a bad investment, because a spreadsheet somewhere flagged the service charge as too high relative to the price. And new build flats are walking straight into this trap, eyes wide open because developers built it themselves. Concierge desks, rooftop gyms, communal heating systems that need constant maintenance. Every one of those amenities that was supposed to make the flat sell itself is now sitting on the service charge line, quietly pushing the building over the threshold that gets mortgage applications declined. A flat that looked like a dream on the brochure becomes a flat that a bank won't lend against. And a flat nobody can borrow money to buy is a flat that sits there, empty, month after month. Not because it isn't a good flat, not because nobody wants to live there. Because the numbers on a mortgage application form say no, and there's nothing the flat itself can do to change that answer. Hamptons has already tracked what that does to prices. Across England and Wales, 38% of new build flats sold at a loss in 2025. In the Northeast, that number climbs to nearly 2 out of every 3. Even in London, it's over 40%. These aren't distressed sales in rundown estates. These are flats in the same glass towers we just described, sold below what the original buyer paid because the pool of people who could actually get a mortgage to buy them kept shrinking. Quick pause because I want you to actually see the next video when it drops. If you're new to this channel, we break down exactly what's happening to UK leaseholders and flat owners every single week using real numbers, not speculation. Hit subscribe now so it doesn't get buried in your feed later. All right, back to it because this next part is where it gets worse. Problem 2 is the one hanging over almost every story we've ever told you here: cladding and the paperwork that comes with it. Even a flat that's structurally sound, even a flat with zero actual safety issues can get caught in this net the moment its building hasn't completed an EWS 1 fire safety assessment, or is still sitting in the queue for the government's cladding remediation program. And here's what nobody tells first-time buyers walking into a show home. Solicitors know exactly what an incomplete EWS 1 means. Mortgage brokers know. Surveyors know. The moment that paperwork gap shows up in a search, the deal often just quietly dies. No drama, no argument. The buyer simply walks and looks at the building next door instead. For a developer trying to sell into a market with this much competing stock, that's a death sentence for that block specifically. Not because the flats are condemned, that they're not being knocked down. They're just frozen, sitting there, waiting for paperwork that can take years to clear, while every month that passes makes the flat look more suspicious to the next buyer who walks through, not less. Now here's the third piece, and honestly, this is the one that ties the first two together and makes them so much worse than either would be alone. A huge share of new-build London flats were never bought by someone who actually wanted to live in them. They were bought by landlords and investors, people betting on rental yield and future price growth, treating the flat as a financial product rather than a home. And that buyer pool is disappearing in front of us. Between the abolition of Section 21 no-fault evictions under the Renters' Rights Act, rising mortgage costs, and tighter regulation across the board, landlords have become net sellers of exactly this kind of stock, not net buyers. Savills research puts the scale of it in stark terms. Roughly 254,000 previously rented homes were listed for sale in the 12 months to the end of March, which works out to nearly 700 properties a day being pulled out of the rental market and put up for sale instead. Take away the investor, and you take away a huge chunk of the demand these towers were actually built for. Developers spent years building for a buyer who is currently walking in the opposite direction, selling their own portfolio rather than adding to it. Put all three problems together, and the picture stops looking like a coincidence and starts looking like a structural collapse in slow motion. London City Hall's analysis of MHCLG data found 105,138 homes sitting empty across the capital in 2025. That's up 81% since 2016. One in every 37 homes in the city is currently empty. Nearly half of those, 47,864 of them, have been empty for 6 months or longer, which under most definitions tips them from between owners into properly chronically vacant. Zoom out past London and the national picture doesn't get better. It just gets bigger. MHCLG's own council tax-based release puts the empty homes count across all of England at 542,276 as of late 2025, up almost 8% in a single year. Of those, 303,143 are classed as long-term empty. That's not a blip in the data, that's a trend line, and it's been moving in exactly one direction for years. And underneath all of it sits a cost most people never think about until they're already living with it. Insurance. Buildings caught up in the cladding backlog have seen premiums increase by well over 100% in some cases, according to FCA research into multi-occupancy buildings, with the very worst affected blocks seeing rises well beyond that. Every empty flat in a block still has to be insured. Every empty flat still needs its share of the building's policy paid for. Someone has to cover that cost, and right now, it's the people who actually live there. And it isn't spread evenly. Some postcodes are getting hit far harder than others. The towers built between 2015 and 2022, the ones that went up fastest during the last construction boom, are the ones most likely to be carrying both a high service charge and an incomplete cladding certificate at the same time. Because that's exactly the window when both cheap construction methods and now banned cladding systems were most common. If you're building one up in that window, the odds that you're sitting next to at least one empty, unsellable unit go up sharply. Older conversions and smaller blocks, by contrast, are largely sailing through untouched because they were never built with the flammable cladding or the sprawling amenity space that's causing all this trouble in the first place. So if you're wondering whether this is your problem or someone else's, the age and size of your specific building matters more than which city you live in. Because here's what this looks like if you're not reading it as a statistic, but living inside it. You bought your flat. You pay your service charge on time every quarter without missing a payment. And half the building around you sits dark at night, unsold, unlet, unlived in. Every one of those empty units is a comparable sale that never happens when you eventually try to sell your own flat because there's no evidence of what units in your building are actually worth. It's a service charge bill that gets split between fewer and fewer paying residents because empty units still cost money to insure, to heat, and the communal areas to maintain, even with nobody home. You are, in a very real sense, subsidizing the empty flat next door. And you never agreed to that when you signed the contract. This isn't only a London story either, even though London has the biggest towers and the biggest headline numbers. The same underlying forces, mortgage refusals tied to service charges, cladding paperwork delays, and a retreating landlord-buyer pool, are showing up in leasehold flats in Manchester, in Birmingham, in Leeds. London is simply where you can see it most clearly, because that's where the scale of new build construction has been the largest for the longest. So if you already own a flat, particularly in a newer building, here's what's actually worth doing right now, not in 6 months when the market has moved further. Ask your managing agent directly how many units in your block are currently unsold or unoccupied. You are entitled to ask that question, and a managing agent who won't answer it plainly is telling you something on its own. Check whether your building has a fully completed EWS1 certificate, because that single piece of paper is very often the difference between a flat that sells within weeks and one that sits for a year. And if you're a first-time buyer and you've found a new build flat that seems suspiciously cheap for its size and location, ask why. A steep discount on an empty new build almost always means the seller is quietly pricing in exactly the three problems we just walked through, whether or not they say so out loud. Now, I want to be straight with you because this channel isn't in the business of pretending everything is collapsing when it isn't. Not every empty flat is a permanent disaster. Some of this stock will sell as remediation programs work through the backlog and as prices adjust downward to reflect what buyers are actually willing and able to pay. Developers aren't sitting on their hands either. Some are cutting service charges to get back under that critical 1% threshold. Others are subsidizing ground rent for the first few years just to get a sale over the line. This market is not permanently broken, and it would be dishonest to tell you it is. But right now, in 2026, the gap between what's been built and what's actually sellable is real. It's measurable, sitting right there in JLL's own numbers and MHCLG's own figures. And every indicator we can find says that the gap is getting wider before it gets narrower, not the other way around. Whether that 22,000 figure keeps climbing through the rest of this year, or whether it finally starts coming down, depends almost entirely on two things: how fast the cladding remediation backlog actually clears, and whether lenders start loosening their grip on that service charge threshold that's been quietly locking buyers out. And honestly, right now, nobody inside the industry is confidently predicting either one happens soon. Some are betting on recovery by 2027. Others genuinely think it gets worse before it gets better. Nobody agrees, and that uncertainty is exactly why this is worth watching closely. If you own a flat or you're getting close to buying one, and you want to understand exactly what the building safety levy we broke down in an earlier video means for what you'll actually pay at completion, that video is linked right here and it connects directly to everything we just covered. I want to hear from you on this one. Drop a comment and tell me, is your building sitting half empty too? Because I read every single comment on these videos. And honestly, some of what people living inside these blocks have been telling me is worse than what the official numbers show. And if this was useful to you, do me a favor and hit subscribe. We break down exactly what's happening to UK leaseholders and flat owners every week with real numbers.